Howdy, folks. This is Darius Dale here to present our macro minute for Wednesday, June 15th, 2022. We got Fed Day and emergency ECB Day as well. So a big week for monetary policy updates. But starting with asset markets here, we have stocks up this morning, commodities mixed with industrial metals leading, crypto down, dollar down, global bond yields down, market moving headlines. In Europe, policymakers prioritize markets over people. So the ECB accelerated work on a new tool to combat unwarranted jumps in euro area bond yields as markets strain at the prospect of the first rate increases in more than a decade. Following an emergency meeting today, the ECB Governing Council also said it will apply flexibility in reinvesting PEPP, that's their asset purchase program, redemptions to preserve the functioning of the transmission mechanism. The yield on 10-year Italian bonds plunged and the euro gained. So this is them effectively a week after announcing the end of their QE program, effectively, reintroducing it, obviously much larger or much smaller scale, but certainly they realize that they don't have the ability to step away from supporting asset markets, particularly peripheral bond yields and spreads relative to the core, German bunds, oats, et cetera. In America, we believe policymakers will continue prioritizing people over markets. So the Fed may ditch gradualism and go for broke with a priced-in 75 basis point rate hike today. That decision comes at 2 p.m. with Jerome Powell speaking 30 minutes later. A new dot plot may show the median rate projection rising to around 3% by year end. But as officials prepare their dot plots well in advance, there's a risk they may not reflect the latest sense of urgency over inflation. Obviously, Friday's May CPI print was a catalyst for that additional urgency. And then lastly, on the growth side, updated forecasts may signal the likelihood of recession. And then lastly, big threat to the global bond market. So the BOJ, the Bank of Japan, faces some friction when it gathers tomorrow. A 10-year bond future slumped the most since 2013 today, with traders betting that the bank will be forced to abandon its pledge to cap yields at 0.25%. The sell-off persisted even after the BOJ ramped up its bond buying program. So as you know, I've been on Real Vision with Weston Nakamura several times throughout the winter and spring, talking about the sort of BOJ's willingness to stick with yield curve control, YCC, and the likelihood that the Ministry of Finance will not intervene in the currency market. But if you look at the tea leaves over the last, let's call it week or two, they're definitely starting to move in that direction. So I no longer think it's appropriate to maintain that legacy view, which was the correct view. Obviously, it's here in mid-June, and we kind of adopted that view, going back to, let's say, I want to say early March at the earliest when we made that call. But things change, facts change, policymakers change their mind, and we have to be malleable and stay water with that. Shout out to my buddy Jim Carson. Big movers this morning. German DAX index up 1.5% to down 4% month over month. 10-year German bond yield plunging on this news, this ECB news, minus 15 basis points to up 66 basis points month over month. 10-year U.S. Treasury yield declining in sympathy with this ECB ECB move, minus 10 basis points to plus 45 basis points month over month. Bitcoin down another 3% to minus 31% month over month. Ethereum down 5% to minus 44% month over month. Getting to our volatility adjusted momentum signal and probable range processes, U.S. dollar index, that's bullish VAMs, still overbought with minus 2.9% down to the lower boundary of the probable range. Gold bearish VAMs still in the middle of the range here, minus 2.6% of downside versus 2.1% of upside. 10-year nominal Treasury bullish VAM still overbought with minus 47 basis points of downside to the lower boundary of the probable range. High yield OAS neutral VAMs here is overbought as well with 104 basis points of downside to the lower boundary of its probable range. S&P 500 bearish VAMs, that is still oversold with plus 9.2% of upside to the upper boundary of its probable range. VIX neutral VAMs overbought signal in the VIX as well, minus 29% of downside to the lower boundary of its probable range. NASDAQ 100 bearish VAMs, that's nearly oversold, minus 1.4% downside versus 10.6% of upside. Russell 2000 neutral VAMs, that is oversold with 12.3% of upside to the upper boundary of its probable range. Bitcoin bearish VAMs deeply oversold with 42% upside to the upper boundary of its probable range. That number is around 30,000. I doubt it gets there anytime soon. Ethereum bearish VAMs deeply overbought as well with 59% of upside to the upper boundary of its probable range. That's numbers at 1,770. Again, I highly doubt it gets there anytime soon, but that is just given the speed of the change, that is where the probable range is now. S&P Shanghai Composite. This is neutral VAMs, desperately trying to break out the bullish VAMs. I mean, this is as sexy as a recovery as you're ever going to see in terms of the institutional flows that are obviously going in there from a Sharpe ratio perspective, but obviously overbought still with minus 5.6% of downside to the lower bound of its probable range. WTI crude oil, bullish VAMs, minus 4% of downside with 9% of upside. In agricultural neutral VAMs here, minus 2% of downside with 4.8% of upside. And then Bloomberg Industrial Metals, that is bearish VAMs here. It's oversold with 7.6% of upside to the upper bound of its probable range. So with that, Darius Dale presenting our macro minute for Wednesday, June 15, 2022. Again, as I mentioned, we'll be on Twitter throughout the Fed meeting later this afternoon. We're going to continue to help you guys and gals manage risk. I mean, this has been a year of tremendous volatility, tremendous risk. And if you have quite frankly, pardon my French, but if you have a shitty macro process, your returns probably look shitty. So definitely appreciate everyone who subscribed to us. We continue to grow, and we're very grateful for that because we're doing a damn good job. Thank you.